What if the next 10 years in the stock market don't give you the returns you're expecting? Not a crash, not a panic, just no growth. Sounds impossible? It has already happened in some of the biggest markets in the world, like Japan's Nikkei 225 peaked at 38,000. 1,989 took 34 years to recover as of 2023, delivering 0% annualized returns for decades. There have been phases where investors waited 10, even 15 years just to see their portfolio move. No compounding, no excitement, just patience being tested. US S&P 500 1968 to 1982, flat returns, inflation 5.9% CPI versus 6.7% nominal return. Germany's DAX post 2000.com sideways for 12 years until 2013. And the scary part, most people don't see it coming. India's recent story 130, 230. Now look at India. The last few years have felt incredible. Nifty 50 plus 250% from 2020 lows. RP 2020 to 7,500 to APR 2026 to 24,000, CAGR 28%, stocks going up, mutual funds delivering strong returns, SIP returns in large cap funds averaged 1, 8, 22%, annualized 2016 to 2026 per AMFI. Corrections recovering quickly. 2022 bear market negative 12%. Nifty dip erased in 6 months. For many investors, this is the only market they've experienced, and that's where the problem begins. When high returns continue, they start to feel normal. But markets don't work like that. Nifty P ratio exploded from 18x 2020 to 24x APR 2026, pricing in perfection. What feels normal today can become unrealistic tomorrow. After every big fall, markets bounce back strongly. That phase creates fast wealth. Post 2009 GFC, but once markets stabilize, the returns slow down. Not because the market is weak, but because it has already moved ahead. Example, Nifty CAGR dropped to 12% 2014 to 2026 versus 25% in recovery phase. In the long run, markets follow one thing: business growth, Nifty EPS growth, 15% CAGR, 2014 to 2026. If companies grow fast, markets reward them. But when growth becomes steady, returns also become steady. No shortcuts. IT sector example, TCS EPS plus 15% CAGR past decade, but now 8 to 10% amid global slowdown. Today, many stocks are not cheap. Mid cap 150 at 32x. Prices already reflect future expectations, which means if everything goes perfect, limited upside, 8-12% CAGR. If things disappoint, sharper downside. Real example, Adani stocks 2023 Hindenburg crash wiped 50% despite strong earnings. In the last few years, money kept flowing into the market. Retail SIPs hit 25,000 CR month FY26 AMFI, FII inflows $20B in 2024. Every dip was getting bought. But if returns slow down, people become cautious. And when money flow slows, markets behave very differently. 2025 preview. FIA outflows $15B amid US rate hikes. Nifty corrected 8%. Today, investors have choices. They can invest anywhere in the world. EM ETF flows shifted. India's share in MSCI EM fell from 20% 2021 to 18% 2026. And money always goes where it gets better opportunities. This creates competition for. So, does this mean India will struggle? Not really. India still has strong long-term potential growth. GDP 6.5 to 7% FY2735. The next phase of the market may not be as easy as the last one. Projected Nifty CAGR 1012% 2026 to 36 versus 15% past decade per Bloomberg consensus. Returns may not disappear, but they may become more realistic. Earlier, almost everything was going up. Now, returns will depend on what you choose, quality over momentum. When you invest, buy on dips, not peaks, and how disciplined you are. This is where most investors fail. 80% underperform index over 10 years. Let me simplify this for you. In the coming years, you won't make money just because the market is rising. You will make money because your strategy is right. Focus on three things: asset allocations, equity, debt, gold, smart strategies, not random investing, long term discipline. Because real wealth is not created in fast rallies, it is created in consistent decisions. If you want to understand how to build a strategy that works even when markets don't, join our upcoming session. We'll break down where the market stands, what opportunities exist right now manufacturing under PLI, and how you can position your portfolio smartly. Link is in the description. And if you found this useful, like this video, subscribe to the channel, and turn on notifications, because in the coming months, understanding the market correctly will matter more than ever.